Hello guys, my name is Femi. So I'm a financial market analyst and I also trade financial assets such as forex and cryptocurrency. So I'll be your tutor on this tutorial series, and it's going to be a beginner series to walk you through the financial market analysis from beginners level to pro level. So first, I will start with introduction to the financial market. What is financial market? From the word market, financial market is a place where buyers and sellers come together to trade financial assets. So sorry for that. Sorry for my gesture. So where they come together to trade financial assets. So what are these assets? The asset can be categorized into about five, six categories, but I'm going to mention four major ones that, or we actually focused on two, like just about two or three are common, which are the forex market, the crypto market, and the commodity market. But aside from those three, we also have bonds, we also have futures, we also have indices and derivatives. So many markets. But the ones that we are very familiar with that are common to us are the let me show you on the screen. Just check the background screen. Okay. So if you click on add symbol, so it will bring you to, these are different categories. So although we are very familiar with forex markets, we are familiar with crypto markets, we are familiar with um, let me just say, not many of us are familiar with stock markets, but I'll briefly explain. Stock market actually is a place where you trade the stock, or let me say where you buy shares, of all these multinational companies. For example, if you want to trade the stock of Adidas, you can come here. You can see we have Tesla, Apple, Palantir Technologies. These are companies, multinational companies. You can see Meta, you can see Microsoft. So these are companies that if you want to buy their shares, or you want to sell, if you have bought the shares and you want to sell it, you can just click on it. Then you'll be able to buy or sell. I mean, you'll be able to trade. Let's, for example, see this Meta. This is the chart for Meta. So that's just that. So as you can see, this is Meta and this is the chart for Meta. So if you click on Microsoft, you see the chart for Microsoft. So that's that for stock. So for forex simply means foreign exchange. This is a platform whereby you trade the currency of a country against the currency of another country. You see that they always come in pairs. Look at this. Under forex we have euro USD. It means you want to trade euro against, it means you want to trade euro against US dollar. So, and you can see how the two currencies have been, relating. So from here you can say, okay, you want to buy dollar against euro, or you want to sell dollar against euro. So we also have so many other currencies. So as so many. So we have crypto market. I'm very sure we are familiar with that. Cryptocurrency are digital currencies, unlike forex whereby you trade the currency of a country. Here the currency you are trading is not for a country. They are digital currencies. They are not currency that you can see. They only exist on the digital platform. So we have BTC against USDT, we have Euro USDT, so many. If you keep checking, we have Ripple, we have Solana, and so on and so forth. So that is crypto asset for you. So we have different varieties, like I said earlier, but we are very much familiar with forex, which is the market that trades country currencies. We have the crypto, which allows us to trade um, different, like a pair of cryptocurrencies. We have stock, I've explained that. Then we have commodities. Commodities actually represent the market that allows us to trade real life products, products that have real life value. For example, gold, oil, farm produce like um, cotton, cocoa, and so on and so forth. So these are real life, these are materials that have real life value. So you can also trade their value right on the chart. So shortly, I've just explained the different kind of crypto assets that we have. We have varieties, but these crypto assets are categorized into different categories. We have the crypto markets, forex markets, commodities, stock, futures, derivatives, and so on and so forth. So now, as it is, the market actually has um, a system that allows it to operate. There are four categories of I don't want to say people, four parties that allow this crypto trading to function. So what are the four categories? Number one, we have the investors. These are the people that come to buy and sell in the market, which are you and I. Even though our money is very small, but millions of people are trading the financial markets on daily basis with billions of dollars, let me say trillions of dollars. Yes, because forex is the financial market with the largest capitalization in the world. Yes, on a normal working day, um, forex usually see up to 6 trillion, 7 trillion US dollar per day. Yes. While cryptocurrency is the next biggest financial market in the world with about 3 point something or 4 billion trillion dollar per day. So that's when the market moves actually. So you can see that they trade this financial markets heavily. So the buyers and the sellers that are trading are their investors. So we have one party. Another party is the intermediary. What is intermediary? The platform that allows you to trade. When you want to trade your cryptocurrency, you need to have an account on an exchange, such as you can see if you click on this icon, on this earth icon, it will take you to categories of intermediaries. For forex, we call them brokers. All these ones that you are seeing, they are brokers. They are brokers. If you keep strolling and you leave forex, it will take you, you see, for this not this North America is another category of financial market. So look at the brokers, we call them intermediaries. So for cryptocurrency, like I said earlier, we have Bybit, we have Binance, we have Bitget, and so on and so forth. So these are the intermediaries. They give us a platform to trade. While the third party are the regulators. Yes, these are the government agencies, or let me say these are private or government agencies that regulate how we trade in the market, how we trade the financial market. So you don't really have much concern, or you don't really have much interaction with them, so you might not really need to trouble yourself knowing how they work or how they operate. But for example, you see the time naira was falling like like a dead man. It was just falling. So the regulator, the Nigerian financial regulator, which is CBN, yeah, the Central Bank of Nigeria, they had to do something. Maybe they borrowed, or I don't know, maybe they withdrew from our treasury account. They needed to pump money into the market in order to stabilize the fall. So this is the work of the regulator. And you see, there are times that government will wake up and they will make some some policy, financial policies in order to regulate the market, in order to control inflation, control so many things. So that's the work of regulator. Why the last party? I've mentioned investor, which are you and I. I've mentioned intermediary, which is the broker, the exchanges that we use to trade. I've mentioned the regulator, which is the government agencies. And the last one are the people that pump money into the market. They give the liquidity to the market. Yes, when anytime I can just wake up and say, okay, I want to short the market. When I'm shorting, who is buying? It's because there's a liquidity in the market. When there's no liquidity, you won't be able to buy, you won't be able to sell. Yes, because there's no money available in the market to, to use to execute your trade or the command that you are putting into the trade. So money must be there. So there's another party that pump money into the market. So that is the fourth party that makes trading, and we call them market maker. Yes, we call them the market maker. So they are the one that pull a large amount of money into the market in order for markets to function. So that's that for financial markets. So if you can recall, I've explained what financial market is, where buyers and sellers of crypto assets meet in order to trade. So, and I've explained the different categories of financial assets that we have. We have the crypto market, we have the forex market, we have the stock market, we have the commodities market, we have the um, derivatives, indices, and so on. But we are very, very much concerned about the forex and the cryptocurrency. So, and I've also explained the parties that work together in order to um, allow the trading, the financial markets to 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 function. So I mentioned the four parties: the investors, which are the buyers and sellers, the um, the intermediaries, which are the brokers for forex, and the exchanges for crypto. Then I also mentioned the regulators, which are the governments and policy makers. And then lastly, the market maker. These are the people that put liquidity into the market. They put the money there, which allows us to trade any time of the day, any time of the day. So that's that for financial markets. Now let's go to analysis, the analytical part of it. Financial is going to go up if if an asset, a financial asset is going to gain value or is going to lose value. So that's what technical analysis is meant for. Basically, to know from what has happened in the past, using the past data, the data presented to us, to predict how the market is going to react or perform in the nearest future. So I'm still going to show you the interface when we get there. So um, what do we have? Yeah, we have two types of analysis. We have the technical analysis and we have the fundamental analysis. Fundamental analysis is not so popular. It's very popular. You should be very familiar with it, but it's not. We don't really talk about it. We don't really mention it because we don't often use it as a day trader. So these are the how do I put it? Fundamental analysis simply means the use of raw data, or let me say data that are not presented on the charts, real life economic events, to predict what the market is going to, say in the nearest future, how the market is going to perform in the nearest future. That is what fundamental is. For example, when first week in December, when before Donald Trump was, when he was about to be, installed as swearing as the president of the United States, the crypto market reacted to these, economic activities. Might think that it's not an economic activity. It is, because when he enters, they know he's going to make some policies that will either affect or boost the crypto market. Likewise, every other market, the stock, forex, and the likes. So there are times that an example of fundamental analysis is the breakout of news and breakout of war, fight, you know, any kind of news that affects the market is a fundamental analysis. And the second type of analysis is the technical analysis, which we are very much familiar with. This is the use of interface, the data presented on the interface. As you can see, I'm on BTC USDT. Yeah, as you can see, I'm on BTC USDT with time frame of 4 hours. So I have this chart on the screen. I have this chart on the screen. What does it imply? This is the representation of how BTC has performed against USDT in the time past. Yes, in the time past, and each candle that you see here represent 4 hours. It represents the activities of BTC on the market in the last 4 hours. Each candle that you see, this represent 4 hours, this is another 4 hours, this is another 4 hours. So that is what, if you zoom to daily, it means each candle represents the activities of the market on what? On a daily basis. It represents the activities of the market on the daily basis. So as you can see, it means, for example, the last candle forming here, this is 12:26 in the midnight. It means the last candle that formed here was a bearish candle. As you can see, the last candle that formed yesterday was a bearish candle. Oh, sorry, it's still we have 33 minutes left for the day to round up. So that is that on um, technical financial market analysis. So I mentioned that we have two types of analysis. The fundamental, you know what it is. This is fundamental news, or let's say any activities that affect the economic, that has impact on the market, that has economic impact on the market. So, and we have the technical. The technical aspect is the one that gives you, that represents data on the charts, whereby you can analyze, interpret, and predict what will happen next. So this is what actually concerns us. So, and I believe technical analysis supersedes fundamental. What's what fundamental analysis does is that it gives power, it pushes the market either up or down. But a technical analyst is less concerned if the market is going to go up or down. What is concerned is, at what point is the market going to stop? At what point is the market going to reverse? At what point can I trade this market? You understand? Why fundamental might be, might be concerned about the direction. Technicals are not concerned about the direction. They are concerned about position. At what point? At what level? So that is why technical is, should I say, supersede the fundamental. The fundamental pushes the market. It pushes it. All these big candles that you are seeing, they are, if you check, you see that it's around that December. That was when Trump was inaugurated, as I think when he won the election actually. So you can see the effect on the market. So it pushes the market. But as a technical analyst, this is a level here. You should know that any moment, when the market breaks this level, you are going to long. So the technical will tell you to long, while the fundamental will help you push the market. So that's why your technical must be very sound, must be very good, so that you can really enjoy, you can have a good, like you can take advantage of the market. So let me just give us one or two advantages of technical analysis. It allows us to know um, when to enter the market, when to exit, and the right decision to make. For example, from technical, I've been able to plot some areas where I would enter the market. For example, look at this spot. I've plotted it and price is still respecting it. So when price came here, I was quick to enter, knowing that the market will go down. And see, it did. The market came down instantly before, sorry for the this thing, before reversing up, and now you can see that it's pumping down crazily. So that's what technical does. So it allows you to know when to enter the market and when to exit. So I will exit here because this is another level. That's why I'm going to exit here. So the second and most important benefit of technical is that it allows you to know your risk, or let me say it enhances your risk management. It shows you how much you are risking. Imagine this market that is moving now. If I want to short it, if I decide to enter here in the middle, where will I put my stop loss? I will see that the stop loss, to put the stop loss above this level, that will be too much. I'm risking my whole account. So in this kind of trade, I won't enter here. But assuming I did not run the technical analysis, I see the market moving, I'll just jump, and eventually the market might reverse and take me out. So it helps you know when to get in a trade and when to get out, and it also helps you know your risk, the amount you are risking in a trade. So that will be all for now in the introduction class. So from the next video, we are going to start the technical um, analysis fully, properly. So, and we'll be starting with the market structure. So make sure to watch this video. Make sure to, you watch this video very well, and try to pick one or two points. So I wish you the best. See you in the next video. Bye.